37% in a single day. No news, no announcement, nothing. That is not a crash. That is an execution. Silver was trading at $121 Friday morning, standing tall as the best performing asset on the planet, and then, in a blink, it was slaughtered. It crashed to $75. $46 of value per ounce erased in just 6 hours. Gold dropped from $5,600 to $4,700, $900 gone, vaporized into the ether. And here is the terrifying part, the part that should make the hair on the back of your neck stand up. No war started today. No pandemic emerged to shut down the global economy. No major bank collapsed. There was absolute silence on the wires. We just witnessed the biggest single-day destruction of wealth in precious metals in decades, and the mainstream media is pretending it was just a healthy correction, a simple case of a market blowing off steam. Do not believe them for a second. I watched it happen in real time. I stared at the screens as the red candles printed, one after another, faster than the eye could track. I watched fortunes disappear and years of hard-fought gains turn to dust in a matter of minutes. Just hours before, the sentiment was euphoric. Analysts were calling for $200, even $300. Regular people, teachers, mechanics, retirees who had parked their savings in silver to protect themselves from inflation thought they were finally getting ahead. They thought the system was finally rewarding the prudent. Then, at 9:30 a.m. sharp, when New York opened, the trap snapped shut. Within seconds, a tsunami of sell orders flooded the market. This wasn't retail traders taking a little profit off the top. This was institutional size, massive blocks, millions of paper ounces being dumped simultaneously with a precision that only algorithms and high-frequency trading desks can achieve. They blew through support levels like they were wet tissue paper. $115, $110, $100. That psychological barrier of $100, the one everyone said was the new floor, didn't even act as a speed bump. It was annihilated. The price cascaded down. $95, $90, $80. Stop losses were triggering everywhere, creating a feedback loop of destruction. Margin calls flooded inboxes across the country. Traders were being liquidated whether they wanted to sell or not. The system was selling for them. It was a massacre, a financial bloodletting of the highest order. And when the dust settled, hundreds of billions in value had been wiped out. The question everyone is asking is why? What changed fundamentally in the silver market between 9 a.m. and 4 p.m.? The answer is absolutely nothing. The mines didn't suddenly produce a billion extra ounces. Demand didn't vanish. The only thing that changed was the rules of the game. They want you to think this was natural market behavior, the invisible hand at work. It was not. This was a rigged game, a coordinated assault on the price. To understand the crime, you have to look at the weapon, and in this case, the weapon was margin. Look at the timeline. Look at the specific dates leading up to this Friday. In the 6 weeks prior to the crash, the CME Group, the exchange that effectively controls the pricing mechanism of global metals, raised margin requirements 4 separate times. On December 12th, they raised margins 10%. The price kept rising. On December 29th, they panicked and hiked it 25% overnight. The price shrugged it off. On December 30th, less than 24 hours later, they hiked it again. And then, just 3 days before the crash, on January 28th, they changed the entire structure of how margin is calculated, effectively raising the capital requirement by another 12%. In total, they hiked the cash you need to hold a position by nearly 80% in a month and a half. You have to understand what this means for a trader. Imagine your landlord calling you tonight, right now, and telling you that your rent has just gone up 80%. Not next year, not next month, but effective immediately. And he tells you that you have until midnight to deposit the difference in cash, or he is kicking you out on the street and selling your furniture to cover the cost. That is exactly, precisely what they did to every silver trader in America. They changed the rules in the middle of the game to force a liquidation cascade. When thousands of traders suddenly need millions of dollars in cash instantly, and they don't have it, the computer automatically sells their position at market price. When everyone sells at market price at the exact same second, the floor falls out. This wasn't price discovery. This was forced eviction. This should disturb you to your core because we have seen this exact movie before. This is not a new script. In 1980, the Hunt brothers and a wave of public buying pushed silver from $6 to $50. The establishment was terrified. The response? They created Silver Rule 7, which banned leverage buying overnight, and the Fed spiked interest rates to 20%. The result was a crash from $50 to $10. In 2011, silver made another run at $50. The banking system was short, and they were bleeding out. The response? The CME raised margin requirements 5 times in just 9 days, an 84% increase in cost. The result? Silver crashed to $26 and entered a bear market that lasted a decade. And now in 2026, with silver at $121, they raised margins 4 times in 6 weeks, 3 times in 50 years. Same setup, same tool, same destruction. Once is an accident, twice is a coincidence, 3 times is a pattern. 3 times is policy. It is not risk management. It is a kinetic weapon they deploy whenever silver gets too powerful, whenever it threatens to break the leash. But why? Why does the establishment care so much about the price of a shiny metal? Why risk the credibility of the markets to crush silver? The answer has nothing to do with jewelry or solar panels and everything to do with the United States dollar. Silver and gold are the only true report cards on the health of the fiat currency system. When the dollar is strong and trusted, metals are quiet. When the dollar is dying, when the world loses faith in the promise of paper money, metals scream, they rise. And a rising silver price is a siren alerting the world that the emperor has no clothes. Leading up to Friday, the dollar index had fallen to a 4-year low of 95.55. Central banks around the world were dumping U.S. treasuries at a record pace, $48 billion sold in January alone. They were rotating that capital into gold. For the first time in history, gold reserves held by central banks exceeded their holdings of U.S. debt. That is a tectonic shift. It is the sound of the world rejecting the dollar standard. If silver had been allowed to stay at $121 or go to $200 or $500, and if gold had hit $10,000, it would have signaled the end of the American financial hegemony. It would have triggered a crisis of confidence that no amount of money printing could fix. So they had to kill the price. They had to smash the thermometer to pretend the patient didn't have a fever. This is a desperate defense of a failing system. The United States is trying to use financial engineering to protect the dollar's dominance, while the rest of the world is moving on to physical reality. And this is where the story gets truly dark. While American traders were getting their accounts wiped out on Friday, while Western investors were panic selling in fear, China was doing the opposite. They were buying. The divergence between East and West has never been this stark. China knows the game is rigged, so they aren't playing the paper game anymore. They are playing for the physical metal. On the very day silver crashed 37%, the Shanghai Gold Exchange reported that 27 tons of physical silver were withdrawn from their vaults. Not traded, withdrawn, taken home, removed from the system. China controls 60% to 70% of the world's silver refining capacity. They process 90% of the rare earth elements. They have classified silver as a strategic national security resource. They are draining the world's supply while the West plays casino games with paper contracts. Think about the absurdity of Friday. The paper price says silver is worth 37% less than it was in the morning. But did the strategic value of silver drop 37%? Did the industrial need for silver in solar panels, electric vehicles, Tomahawk missiles, and AI data centers drop 37%? No. The fundamentals are screamingly bullish. We have had a supply deficit for 5 years running. The world consumes more silver every year than the miners can dig out of the ground. Above-ground stockpiles are at critically low levels. The demand is vertical, and the supply is flatlining. Yet, the price crashed. This creates a disconnect that cannot last. One side is trading promises and IOUs on a computer screen. The other side is loading trucks with actual bars. The paper price says $75, but try buying an ounce today. Call a dealer, look online. The inventory is gone. The premiums are insane. If you want actual metal in your hand, you're going to pay a massive markup over that fake paper price. The physical reality has completely divorced from the paper manipulation. The West is selling paper to defend a currency. The East is buying metal to build an empire. And let's talk about the human cost of this execution. This wasn't a victimless crime. Real people were hurt. I'm talking about the guy who put his retirement into silver because he was scared of inflation eating his pension. I'm talking about the young family trying to save for a house who saw silver as a way to preserve their down payment. They woke up Friday feeling secure, and by dinner time, they had lost 1/3 of their net worth. Not because they made a bad bet, not because they analyzed the market wrong, but because a group of unelected bureaucrats at an exchange decided to change the leverage rules to protect the big banks who were short. It is a theft. It is a transfer of wealth from the little guy to the establishment, plain and simple. They crashed the price because they are terrified. That is the only logical conclusion. You don't deploy nuclear options like quadrupling margin requirements unless you're scared. If silver was truly a barbarous relic, if it didn't matter, they would let it trade freely. They wouldn't care if it went to $200. The fact that they fight this hard, that they coordinate these attacks with such precision, tells you exactly how valuable silver really is. It tells you that silver is the Achilles heel of the entire debt-based financial system. They want you to despair. They want you to look at that red chart and give up. They want you to sell your physical metal back to them at a discount so they can cover their shorts. That is the psychological warfare component of this execution. They want to break your spirit so you never touch precious metals again, so you go back to buying their inflated tech stocks and their devaluing bonds. But here's the truth they can't print away. They can manipulate the paper price, but they cannot print silver. They can create $1 billion of digital currency in a millisecond, but it takes 10 years to find, permit, and build a silver mine. They can liquidate futures contracts on a screen, but they cannot liquidate the metal sitting in your safe. Friday wasn't just a financial loss. It was a demonstration of power, a brutal reminder of who controls the casino. But the fact that they had to fight this hard, that they had to run the same desperate playbook for the third time in history, proves one thing beyond a shadow of a doubt. They are losing control. They are trying to hold a beach ball underwater. They can push it down with margin hikes. They can push it down with media blackouts. They can push it down with rigged algorithms. But the physics of the market are against them. The supply deficit is real. The industrial demand is real. The draining of the vaults is real. Every time they smash the price, they just make the metal cheaper for China and India to buy, accelerating the drain of physical inventory from the west to the east. They are literally selling the family silver to keep the lights on for one more day. They called it a crash. I call it a crime scene. I call it an act of desperation by a dying regime. When you see a 37% drop on no news, you aren't seeing a market correction. You're seeing a glitch in the matrix. You're seeing the gears of the machine grinding as it tries to force reality to bend to its will. But reality is stubborn. Physics is stubborn. Eventually, the paper game ends. Eventually, the vaults run dry. Eventually, the person holding the physical metal makes the rules, not the person holding the paper contract. Friday was painful, it was brutal, and it was unfair. But it was also a signal. The louder they scream, the harder they hit, the closer we are to the end of their game. They executed the price, but they resurrected the truth. They are absolutely terrified of what you hold in your hands.